Friends, this is the part 2 video on the fuel pricing. We'll be talking about how exactly the retail fuel price mechanism works in India today. Since 2010 and 2014 onwards, the prices of petrol and diesel have been made market determined by the government. Petrol was deregulated 26 June 2010 and diesel was deregulated on 19th October 2014, and from then onwards these prices were supposedly to be decided by the public sector oil marketing companies, the so-called OMCs, namely Indian Oil Corporation, Hindustan Petroleum Limited and Bharat Petroleum Corporation Limited. Together they control roughly 90% of the market share. They are supposed to decide on the prices in line with the changes happening in the international market prices. This has to be overseen by PPAC, that is Petroleum Planning and Analysis Cell, which comes under the Ministry of Petroleum and Natural Gas. Prior to this, the earlier days, the petrol price was updated every fortnightly updation. And since 2017, India adopted the dynamic fuel pricing policy. The cost of petrol in India is to be revised on a daily basis in line with the rolling average benchmark international rate of the preceding 15 days. There are various factors which they need to consider, things like rupee to US dollar exchange rate, the crude oil prices and so on. The petrol and the diesel prices are to be revised every day morning at 6 a.m. However, for the past 6 months or 1 year, we can see that the petrol and diesel prices continue to remain frozen. Actually, for a record period of more than 12 months now, it has been frozen. Although we say that daily it has to be revised, that could be due to various reasons. These OMCs, they consider other factors like inflationary pressures when the prices are going up. Somehow, these prices were kept frozen. Last year, when the prices went up after the Russia-Ukraine war issues came up, the prices of crude oil went up and correspondingly international prices of diesel, petrol, everything went up. In India, the petrol and diesel prices, retail prices were kept frozen at a particular level by the oil marketing companies. Because of that, they were suffering a lot of losses. Since August 2022, the crude oil prices started coming down below 100. In March, April, it has come almost down to close to $80 per barrel. Today, actually, the oil companies are making some profit on petrol. Whatever profit they are making today, that they're trying to recoup the losses they have made in the last year. So the prices still remain constant. So to understand the pricing mechanisms, we start with the 5 stakeholders in the whole of supply chain in the petrol diesel business. The oil production and the exploration corporations, that is the first stakeholder. They're exploring and producing oil. ONGC, Oil India Limited, and there are some private players like Cain Vedanta. Only around 25% of the country's oil requirement is met through these companies by the oil producing companies, and the rest of the things come from imports. The second stakeholder is the oil refiners. Oil refiners, there are 23 oil refineries in the country today. Joint ventures, there are 2 numbers, there are 2 private players, and there's 3 standalone refineries, and then there are other refineries part of the public sector oil marketing companies. The refining capacity is almost 250 million metric ton per annum, which is quite high. We are almost 4th in the world from terms of refining capacity. The crude consumption point of view, we are 3rd only after USA and China today. That means even the import of crude oil, we are the 3rd in the world. We import almost 85% requirement of our total refining capacity today from various countries, mainly from Iraq, Saudi Arabia. Before 6 months, the import from Russia was almost 1%. Today it has risen to 35%. So almost 1/3 of today's oil import is coming from Russia, because we are getting Russian oil at a discount rate, which has really helped Indian economy, in fact, to tide over our difficult times. And because of the restrictions, sanctions by European countries, USA on Russia, Russian oil prices come down. They're offering huge discount. We are able to get the benefit of that, and so much so, India is exporting a lot of products like diesel and little bit of petrol. Government is trying to put some windfall profit tax on export so as to divert all the produced petrol and diesel to the domestic requirement. We talked about oil production. Then we talked about the oil refineries. The third stakeholder is the OMC, oil marketing companies. They buy oil from the refineries and market it. They have a huge marketing setup. Then the next stakeholder is the dealers. Dealers are owners of petrol bunks who are engaged in the business of buying fuel from the OMCs and distributing to the users. And then the next stakeholder is the central and state government, the government bodies. And the last but not the least, the stakeholder is the users. That is, we users, we buy fuel for our vehicles and all other things. Now let us try to understand how the retail selling prices of petrol is fixed in Delhi. The base price considered is the 57.16 rupees per liter, on which if you add the freight element of rupees 0.20 rupees per liter, it comes to 57.36. And this 57.36 is a price which is charged to the dealers by the OMCs. OMCs handing over the petrol to the dealers at 57.36 rupees per liter, on which if you add excise duty charged in Delhi is 19.9. Excise duty charge is the same all over India. Then the dealer commission is rupees 3 rupees 75 paise. That is also going to be same all over the state. The VAT, the value added tax in Delhi is rupees 15.71 rupees per liter. This varies from state to state, from place to place. In Kerala is almost like 26-27 rupees per liter. So the retail selling price in Delhi, if you add up all these things together, it comes to 96.72. In Kochi or Kerala, it is close to 108 rupees per liter. So we can see that almost 52% to 60% of the total price what we are paying at the end at the retail market comes from the original price charged to the dealer by the refineries and OMCs. Balance come from the taxes. In Kerala, if you see, it's almost like the state tax constitute to almost 60% of the total tax and 40% by the central government. In Delhi, you can say it's almost like a 50-50 percentage by central and the state. So friends, with this, let us conclude this topic of how the retail prices are arrived at in India for diesel and petrol. In the next part of this video, we will dwell more into the details of the justifications, whether it is right to price it like this, whether it is right to price it high or price it low. Okay, thank you.